Hey everyone, it is Jay Sola from Investors Alley, and this is our options trade of the week. We are looking at Market Chameleon at marketchameleon.com, checking out their very useful unusual options volume table to see where some of the action was today. Another big down day in the market, so we expect a lot of action in some of the bigger option names. Sure enough, Facebook, Amazon, Wells Fargo, Twitter, Nike. So a lot of action across the board. Of course, far and away the biggest amount of volume here in terms of unusual volume is in Facebook. And of course, Facebook trades a ton of options. So, you know, if it's 3.5 times normal in Facebook and over 1 million options, that obviously that is some big news. It looks like pretty evenly distributed between calls and puts. But you can see here that the stock did drop 8%, which is no joke, particularly for one of the FANG stocks, right? One of the big ones. So what we know happened, though, was that Verizon in particular pulled ads from Facebook, concerned about hate speech. Could be a sign that other major companies are going to do so. Certainly Facebook, which generally makes its money from ads, is not going to be pleased that one of their big clients is pulling money and also potentially paving the way for other companies to pull ads and revenue away from that company. So certainly reason for it to go down. If we want to look at some of the trades more specifically, I can go to the trade screen and then we'll sort it by quantity to see what some of the bigger players were doing. So let's go ahead and do that. I like to see the big trades at the top to kind of see where a lot of the action was. So right off the bat, we will see that a bunch of 2,000 lot trades in September. A little bit hard to know what was going on here. These could have been closed, probably closing some previous trades, but definitely a lot of action there. And then a lot of 500 lot type orders, which again, when you're talking about Facebook, it's a high price stock, so options are going to be more expensive. So when you're dealing with a $200 stock, options are going to be more expensive. So you'll see smaller quantities. So 500 is a lot. I mean, you look at some of these 500 lots, and we're talking about $1 million worth of options. So these are still big trades. This one is interesting here. Looks potentially like a collar. Oh, it could be a closing trade because there was a lot of open interest, but let's assume for a moment that this is an opening trade with the stock $219.50. Someone could have been selling the 240 calls as a way to finance the 210 puts, most likely, which were a lot more expensive. This takes about half the price, a little less than half the price off puts. So this could be hedging a stock position that's somewhere in the middle, when the price is in the middle here between calls and puts. It could be stock that has been purchased somewhere in between those, and this is just a way to hedge that and a way to pay for the hedge, with the upside above 240 probably capped now after this news, and then wanting some protection in case it keeps going. So looking at that here from a brokerage perspective, you can see obviously the big move here today with the news that Verizon's pulling ads. As I mentioned, selling that 240 strike seems reasonable because it's probably not going back up there ahead of July expiration seems likely, and then buying these puts, it's already down. That was done at $219.50. It's already down to $216, and this is where those puts start to kick in. Using the calls to buy the puts means it only has to go down to about 207 or so for those start to make money. Of course, it could be stock that has a purchase price or an average price somewhere in this range up here, and this person's wanting to protect that. Or it could be something else entirely. It could be closing trades, but looks on the surface like a collar, which is generally used to protect shares. You can see there's a lot of action there in the 240 call. It was being sold. And then the 210 put there also about 5,000 traded. So, and there was more volume than open interest there. So, again, people could be hedging. Those were purchased for 5 something and they're already up to 7 something. So you can see why these 240s were sold to help lower the cost of this. This trade's probably, it is already making money. This collar trade is already making money. This is down maybe 50 cents and this is up about $2. So if you're interested, you own Facebook shares, collar is a good way to protect yourself without having to pay full price for the hedge. And this is the sort of thing we talk about in my bi-weekly chat room called Coffee and Condors. If you want to check it out, it's www.coffeeandcondors.com.